Whether it's Brexit concerns, the oil glut or the weather, the FTSE 100 is impacted by hundreds of factors, both domestically and externally as well. Well, to discuss what might impact stocks in the second quarter, I'm joined by Leroy Lawrence from Quadron Capital. Hi, Leroy.
Hi.
So what can we expect?
Well, of course, the key effect has been the Brexit. When Boris Johnson came out and said that he was in support of the UK leaving the European Union, we saw an immediate effect on currencies. The pound fell off pretty harshly straight away. So that's one big negative we have at the moment moving forward for FTSE 100. The market does not like uncertainty, and that's one thing we have up until June when the referendum comes out. Aside from Brexit, which is one concern, we also have the concerns about the oil market and mining. So the FTSE 100 is heavily mining company reliant, and they're heavily linked to oil prices. We've seen massive falls in oil prices. The one thing that could possibly change that direction is the April 17th OPEC meeting.
Yeah, in Qatar.
However, it's unlikely that these nations are going to reduce their output, and so therefore we may well see continued falling in oil prices, maybe as low as into the 20s even, which will then have a knock-on effect on the FTSE 100. So I think leading up in next quarter until June, we're going to have not massive growth in the FTSE 100, and past the other end of the referendum, likelihood is, especially if we stay in the EU, we will see the FTSE 100 climb heavier.
Right. So do you think if we don't, it will fall substantially then?
Yeah, it's a step into the unknown, first of all. We have access to a 500 million people market in the EU right now. It's easier to have imports. A minority of exporters in the UK will be benefited. So, of course, we're going to see major concerns, major fallout. I would expect job losses as well. Hopefully we do stay in the EU, but depends who's voting, and young people who do want to stay in the EU often don't vote, so we shall see.
Yeah, that's the concern, isn't it? The young people aren't going to go out and vote. That's what people are frightened of. But okay, if you're an investor, you've got your portfolio and you're looking at the FTSE 100, you still want to make some money. Yep. How do you do that then? How do you play it?
You have to make money when there's blood on the streets, to put it not so politely,
Wow,
I'm afraid.
That sounds violent.
Yeah, so when you look at companies like Tesco's, which had a really bad time 2 years ago, they've come back. So you want to be investing in companies which had a bad time, they've shown some positive direction and keep going. So that's the same for your banking sector historically, same for retailers like Tesco. But when it comes to investing into the mining sector, there should still be growth there, but I don't think you'll see the same level of growth because of those external concerns we have at the moment.
Yeah, can I pick up on that? Because the mining sector, it is embattled, isn't it? And it's quite sad, really, what's happening to the UK industry.
Very much.
What's your take on it then? Do you think that the government should be supporting it more? Do you think it just desperately needs a buyer? Because it's not profitable anymore, is it?
Yeah, I mean, the thing is that the Conservative Party are anti-nationalisation, so it would be a nail in the coffin of David Cameron to choose to nationalise a company or any industry. It probably needs it, unfortunately. But even in the previous government of Tony Blair, where they nationalised more industries than Margaret Thatcher, he wasn't keen on nationalising either. So it's a very tricky place. Hopefully there will be buyers who want to come on and take this industry that's losing £1 million per day, which is a massive ask for anyone, and turn it around. But also that means us selling off our industries again abroad, as we did previously with the car industry. So it's a very difficult place for David Cameron, for the government, and we'll have to choose an ethical buyer, if there is one, who want to invest into that part of the market. And
maybe several to take it on.
Yeah, conglomerate will also work very well as well.
Yeah, it's this factor of competing with China, isn't it?
Yeah.
It seems to be virtually impossible.
But we are seeing some slowdown in China as well at the moment.
Very true, yeah.
Things change.
Yeah, absolutely. All right, we'll leave it there. Thank you very much.
Thank you.
That's Leroy Lawrence talking to us from Quadron Capital about the second quarter.